I think we've spent a lot of time working on scenarios. We started to work very quickly on a 3, 6, or 9 months prolongation of the coronavirus event. Revenue drops of 10, 15, and up to 30%. And as we move forward, we began to get clarity mainly through talking to our customers. We were then able to get also clarity on the government subsidies around furlough and around wage support. And that allowed us then to narrow down to the point where we, as you say, feel brave enough to try to put out let's say, an updated current forecast out there with assumptions, which really are based around the recovery that you mentioned. We think April will be the worst month, and then it'll be gradually, let's say, less worse. I don't want to say better. We see a lot of turnarounds. Those are when the process plants shut down, when they go through their annual revisions. A lot of these are being pushed either to later in the year, which of course is then part of the recovery, or they're being pushed into 2021, which means we'll pick them up, 12 months from now. So underlying assumptions are, gradual increase on the customer side, delayed turnarounds, but materializing this year, and continued support from the government.
What's the business going to look like by the time we get to the end of this year, Tom? Because I've seen some stories related to potential workforce cuts here in the UK, furloughed workers that may not be taken back on. Can you tell us a bit more about what cuts you're intending to manpower at this stage, and what other reductions in costs the business might see?
Mm-hmm. Well, we have about a 25 to 30% component from oil and gas. Our other major groups are energy and utilities and chemicals. And of course, the North Sea is hit by the oil and gas price collapse. So we have actually laid off people both in, let's say, Stavanger and in Aberdeen. We've laid off people in Texas, but then back to the UK, we do see an uptake in energy and utilities, in particular around Hinkley Point. So we're, let's say, releasing workers in Aberdeen. We're furloughing workers. Staying again with the UK numbers, we have about 500 workers that are furloughed. But in the long term, or even the medium term, we do see a pickup in energy and utilities.
Tom, I've been looking at the 6-page report a lot, and I know oil and gas is one of your biggest worries there as well. I think you just said you see a turnaround in the medium term as well. What are you basing that on as well? Because a lot of people are concerned that this won't just be a short-term downturn, and actually we may well have seen peak oil now.
Yeah, Steve, I think the return I was referring to was in the core of our other businesses. I agree with you fully that oil and gas, especially upstream oil and gas, is going to be down for a while. We see the upstream events in the North Sea. We see something similar in Texas. In the Middle East, they are still continuing, but there's mainly on the midstream, the downstream business that we're looking at. Examples would be Ruwais in Abu Dhabi, or even some improvements in Saudi Arabia. But I fully concur with you, it's going to be down for longer this time.